I think this is a very overdue video chat that we get to share to everybody. I think Drew and I first met through Rob Bill's channel. We both coach on his private coaching, and we connect quite a bit. We met for the first time in person not too long ago, which was amazing.
Henry is amazing. You picked a good spot when it comes to that.
Yeah, it is a good spot. Yeah, we both live in Arizona, so that makes it kind of nice, even though I've been in Flagstaff quite a bit lately. But in this video, I just wanted to do like a quick chat. I want to introduce you to my people, what you're working on. So if you want to just give us a little intro.
Yeah, man. I think I'll tell in the intro on I might be buying a home in your neck of the woods or your neighborhood for now, which I know it's sometimes it's Scottsdale. Right now it's Flagstaff. Speaking of places, I'm from Southern Indiana originally. Spent about 26, 27 years there. Been in the Valley, or what they call Phoenix, Scottsdale, greater area, for about 12 years, and moved here to get into real estate for the most part on the full-time basis. But I've been an Airbnb SuperHost since the 49er Gold Rush era, man. Like back in 2016, I was just working a job in the hospital, and my company got acquired. Took a hefty pay cut, man, and realized real quick to pay the bills, I'm going to have to call mom, dad, or start pulling money out of my 401k, contribution, so to speak. And I was like, well, I don't want to do that. So I bet I can find a scrappy way to make ends meet. And so I started, my truck wasn't new enough to do Uber, but Airbnb was on like a side gig Google search, and there we are. I thought it was subleasing at the time, but there's been plenty of people that have sold plenty of courses that call that model rental arbitrage. Man, that was my introduction.
Yeah,
and I was like, real estate's easy. You just print money in this business. And fell in love with it, John. I think you have a similar story to me as well. And then it's like I couldn't wait to buy a home, couldn't wait to just jump into real estate full bore. And most of my friends were just loan officers instead of agents for whatever odd reason. It seems like there's always more agents than loan officers, but it's just that way for me. And moved back out to Arizona, took a job as a loan officer, drinking from a fire hose, constantly trying to learn all those guidelines and the ins and outs of that business. And then as soon as I basically qualified for a regular loan because I changed industries, was a commissioned employee, literally 12 months in the new job, I closed on a house, started house hacking, Airbnb-ing my guest suite, had another roommate, and just lived for free here in the Moon Valley area of Phoenix, and then just washed and repeated that a few times while picking up some investments in-state and out-of-state in Florida, Indiana. Got up to 13 listings across 3 states. Now I'm down to 5. Just sold some of the stuff that was kind of like headache properties, and then took that time that it gave me and some of that money and then repurposed that into my now lending company that focuses on the Airbnb investors and doing loans where people don't qualify traditionally for loans because they got too much real estate or their side gig or self-employed. And we just, as long as it works on Airbnb or you got the actuals, the Airbnb ledger reports, loans close with that only. And I've just really tried to do whatever I can to take all the knowledge that I've had and give it back to the people that want to venture on that dark side of the real estate world. So
dark side.
Yeah, man.
Yeah, dude, your and our journey is very similar, man, for sure. The house hacking thing is how I got started. I love the house hacking. I still do it to this day. I have a main house that I rent out sometimes, but mostly I rent out the casita and live in the main house. Yeah, house hacking is it's killer. And I just downsized too. I got rid of some homes that give me a headache or was a really good idea to sell. At the time, I was like, man, do I want to sell these right now or want to hang on to them? I'm actually kind of glad I sold because the headache of it is way less, which is cool.
What were
how many
of those headaches? If you don't mind diving into it.
On the homes that I own, so I do a combination, right? So I own my homes and then slowly started managing for other people. One of the homes I sold in LA, it was a good learning curve, but the neighborhood I was in was pretty rough. So every so often we got some pretty rough guests that were kind of sketchy. And then the last straw that broke the camel's back for me in LA was the taxes. Sure. California's taxes just kept going up and up and up. The profit margins were going down. I think they just increased another Airbnb tax also. So it just made no sense at that point. I was like, okay, this is a lot of work, a lot of headache for not that much money. And we sold it and made a lot of money still. And that was cool, which led me to come to Arizona and buy a couple properties.
Yeah, man.
So,
return. I think, I don't know the exact formula, but I believe that formula is return on equity. You know, like you were cash flowing well enough. You were in the 49er years as well, especially in California. And like, as sometimes it's like, you know, what do we do with our equity positions? A lot of times it makes sense to repurpose it. It sounds like you capitalized on that. So hats off to you.
Yeah, to help me get like my base print, right? Help me learn a bunch. I had to like dig in the weeds and figure things out. And then once I came to Arizona, I felt like I was a little bit more polished and confident to like buy another house instead of just being like, oh God, what am I doing?
Tell me about, I'm curious to know on like buying a house, what that process looks like. I work with a lot of real estate agents, and I know some hot button topics for them is like, hey, whenever you're mad on a transaction, what is it? And usually that conversation leads to two things that I've found in my research. It's not closing on time and the loan officer not communicating enough. And you're an entrepreneur, right? You're a house hacker. A lot of traditional underwriting methods raise eyebrows when they look at a file like yours or like me if I'm applying. And did you have any loan that didn't close scenarios or any kind of tough scenarios whenever you were repurposing that money or trying to buy again once you sold in LA?
It's a good question. When I first sold in LA, I didn't know what I was going to do. So I sat on the money for a while. I think I moved to Utah for a while and just snowboarded a bunch and just kind of was like, because I sold this other business, I was trying to figure things out. I didn't know what I was going to do. So I kind of parked on the money for a second. Probably not the best idea. I could have 1031'd it or something like that, but I didn't want to be rushed into buying something just because I had to spend the money. So I sat on it for a handful of months before I came to Arizona. And luckily, my deal with that house that I sold in LA was with my brother. He was a top real estate agent in Malibu. So when it came to the real estate transaction, I wasn't involved on that because my brother was 50 partners and I trust him, obviously. So he just like got us the best deal. I mean, we would walk into 30 homes within 2 minutes. He knew that was a bad deal or not a good deal. So like so fast. So I was like, all right, cool. So I let him do all the paperwork and contract and stuff. And then even when I came to Arizona ready to buy, my younger brother literally just got his real estate license because he was just trying to make some side cash. And I bought a home with him. That was his first, I think it was his first buy. Yeah. So my transactions have been like pretty easy, I would have to say. Like for the most part, I think where like what you're saying gets frustrating is being self-employed for so long, trying to prove that you have money or prove that you can like afford to pay for the house every month, or like your Airbnb profit is going to pay for the house and some. That part is extremely frustrating to me. And like going to like the traditional banks, it's like you feel like a criminal almost. You're like, trust me. Oh God, just trust me. And they're like, nah, that's not how we work here. You're like, okay, I get that. So that's probably that was the hardest part. And then as you scale, you know, that's even harder because they're like, oh, now you're even more broke than you were. You're like, wait, I'm not though. All these houses are making money. I can show it to you. I don't know if that answered the full question, but like, you're probably really good. You're probably really good at coming up with creative ways to buy a house when it's frustrating.
Well, you said it, man. Like once you're self-employed, I mean, that is self-employed is brain surgery in itself, right? But if you're self-employed and you're a real estate investor, to the traditional loan teams, that's brain surgery while skydiving. Right?
Yeah. So straight up. For real.
It becomes hard. And the great thing is what I tell everybody, like there's still options out there. And to do the option that doesn't feel like you're going to jail as the client or the borrower, it's not a drastic difference. A half a point, maybe a point, maybe the down payment changes 5%, but you can still get it done. And it just depends, right? I always say like, hey, look, if you're up for skydiving, we like skydiving. We're good at brain surgery. We'll go through it, but just so you know, it's gonna, I always try to make analogies, as silly as that sounds, but like, as long as you're ready to put the boxing gloves on, it feels like a Mike Tyson fight beforehand. That's what's most important. It's the, we always just talk to our agent friends, and it's like, hey, look, this is how it's going to be. We can do this really cool loan, but just so you know.
Yeah, that's what I would like to pick your brain on that more, because all of my homes, it's crazy. Like talking with you and talking with Rob has really opened my eyes to other ways of buying. I've always been like the traditional buy and sell kind of person. It's kind of crazy because my family and I, we moved like 20 something times growing up. We always bought houses, and my dad and mom would teach us that process, and we kind of watch it, So I thought that was pretty much the only way. So every one of my deals have been either all cash and then I refinance after I'm done, or the traditional 20% down, traditional
I love
bank.
how you brush over that.
Yeah,
that is such a good tactic. The all cash and then refinance after you're done is called delayed financing. That is like one of the most underutilized processes there is, but it's such a good one, man. Super underutilized.
It's my favorite.
Yeah, because like then you don't have the seller agent and the seller beating you up and the loan team. You can just say, hey, I'll close cash, and then after you close cash, you do like the reverse purchase or delayed financing. So if you qualify for an FHA loan, after you close, you can get 97% of that money refunded back to you. Now you just have a loan on the property. Really cool, man. I didn't know you did that.
Yeah, I've done it twice or three times. Twice. Yeah, twice. But like you said, it can be a little scary because doing that, my last deal I did, I was maxed out. It was like a purchase of 610. Everybody, the typical real estate, everyone in your mother's telling me it's a bad deal. Don't do it. Wait until the market crashes. That was 2 years ago. I was like, what am I going to wait forever? Like, I have money. I want to buy a house. So I bought the house all cash, and it was a little higher than my budget, but then I knew I had to do it at least $100K in remodeling right away. And that's where it gets a little scary because you want to move fast. And then B, I ended up putting it on my credit cards, but I got 2 business credit cards, 0% down, like no interest, nothing for 12 months. And it worked. I don't advise that to people, but it worked.
I mean,
why not?
Creative financing 101. I think it's a great move. I mean, I'm working mortgage, so it's always easy for me to say to use debt and leverage debt. There's spreadsheets everywhere. You don't have to be a calculus master to figure it out. I think as long as you can figure out rough numbers, then, a $5,000 mistake can be made if we're not careful. Or, if it's a hotel, $150,000 mistake. And if you're taking money from other people, that's things to be cognizant of. But yeah, man, I think that's a great method. Yeah. Would you did anything any differently on the most recent one? Looking back at it now?
I don't know if I could have, because that's like right when the whole lockdown situation was going on, all that bull crap, So construction was really difficult. People were definitely on the edge of trying to sell their home. My only big lesson there was the construction took way longer than I thought, way longer. And I have a pretty good background in that. But there were so many unpredictables because of the whole lockdown, and windows took way longer than expected. So I don't know. I don't think I would be able to change much from that at all. And I think I refinanced within 10 days of it skyrocketing. I feel like I got so lucky. I think I'm at 4% maybe. And literally 10 days later it went to 7.9 or 7.8. I was like, whoo, that was close. Yeah. It was cutting it close.
How long did that project take?
And that was just remodeling the casita for the most part. We did little things in the main house, but my main focus was finish the casita as quickly as possible so I can start renting the casita, and then I can live in the main house. And then if I needed to start, remodeling the main house, I could, stay there or stay in the casita if I needed to, whatever. But it took 6 months for the casita, which is way longer. It could have been done in 3 months, no problem. But the windows messed everything. I mean,
up.
even the windows took 3.5 months.
Even for a 3-month contingency or change order, or whatever you want to call it. I mean, I personally still think during that time frame, man, that's still pretty good execution.
Yeah, and someone like in your position, right? Like I was working with a different lender at the time, but he would always update me. Hey, how's the construction going? How are things going? What's your deadline? I'm like, oh, we're about a month away. He's like, okay, let me pull some reports. Okay, if you can finish on this date, I can lock you in at like a 4%. So you might want to try to at least get it up where you can get it inspected. So he would stay in the loop with me, which would help, because otherwise, if we didn't communicate, maybe I wouldn't have rushed on certain things to make sure I got in there. So having a good partner with that was awesome. Good experience.
Yeah, absolutely.
I'm curious, in your experience, like what are some of, like, especially right now, because it's where I feel like we're such in a different type of market, when you're helping a lot of experienced investors or maybe a first time, what are some of like the biggest things that you're working on right now, like that is a lot of your clients are trying to figure out, that you think maybe is your specialty even?
Man, it's funny you mentioned that. So I think clarity, bro. Like if I can answer it in one word, it's clarity. A world where there's so many distractions, nobody has clarity anymore. And like, man, I'll tell you what, the only time I have clarity is like when my phone's off and I'm having peaceful coffee with my wife, or I'm walking down the middle of the fairway playing golf, and that's the only thing I got to think about is my next shot. Because as soon as the screens go on, you know how...
Yeah, you and I need to play some golf still.
We should, man, absolutely. But you know how it is. As soon as the screens go on, I mean, I feel like every day I'm in the middle of Wall Street, and I feel like my clients have that feeling too, because Airbnb is such a sexy topic. There's a lot of distractions around it. And I think there's a lot of information, but sometimes that information can have mix. And so like I made a story on Instagram about my friend Jimmy where he's a house flipper and he's trying to not flip but hold for an Airbnb. I'm like, well, dude, like, what's your cash flow? What do you want it to be? How do you know if it's success? You can't always chase 3,000 in cash flow, 20,000 in cash. Like, what is realistic? How do you know that? And so, you know, our friend John Bianchi, I just like, look, man, like you can make some money. I want to do what's best for you. I think you should sell the house. I think you should keep the house. Too bad you can't do both. You got to make a decision. I think you just need clarity on like, what is the number that you, and I wouldn't look at it a month to month because everybody has shoulder seasons. Look at it on an annual basis. Like, what's it a win? Is it $200 a door, $2,000 a month, $22,000 a year? What is that number? Figure that out, work backwards from there. And if you're at $100 annually in gross profit, sell the house. And I just think a lot of people have that kind of clarity issue. Like, what is the key metric that you have to hit? So that way, me as a lender, I'm not here just to write somebody's loan. I want to make a friend. And I want them to trust me. Like, Drew, should I do the deal? And I'm like, well, what are you clear? Like, you know, what is your end goal? Like, what is the most important thing? And like, you can give somebody a 0% interest rate and it be a terrible deal. And you can give somebody a 10% interest rate and it can be a good deal. So it just depends on what their clarity of their outcome is that they want. And I just think that can be really hard for a lot of new and people that have even had it success because they had that one super property, like maybe that LA property of yours just crushed it in the very beginning. And so are we holding that expectation to the deal that we pick up 4 years after that? That's what I see the most of. And I just wish, that's why I love Bianchi's service, man, is because like, have somebody else do it. Them give you a professional opinion and make a decision that way.
Dude, speaking off topic, John Bianchi is such a breath of fresh air when it comes to data. Like, this dude has literally blown my freaking mind. Like, I love the guy as a human being, and he's out there really trying to make a difference. He just became a dad, but like, by the way. Dude, and he just became a dad, and he just gave away this, like, what could have been like a $5,000 software program course for free. I'm like, what are you doing? But it's so crazy because people don't, I'm helping develop people up here in Flagstaff that didn't run any numbers, bought a house in 2 years ago, like the height of the market. And they're like, we're going to make a ton of money on Airbnb. Now we're going live. And I'm like, you guys are never going to make money on Airbnb. You bought way, way, way too high. And the market is only going to get to here a night and a month. Like, either you sell it or you're okay with hanging on strong for 3, 4 years, 5 years, and then do a big refinance. But it's so crazy you just said this, dude, because I've been like struggling even in my own head. Because everyone gets so used to, oh, I need to get rich. I need to make all this money on this deal. Yeah. It's like, it's so crazy to me. It's like, yeah, the distractions. I mean, even if you made $500, obviously every number is different, but even if you made $500 a month and you own a house and you plan on keeping it a long time, to me, that's like a win. Like, even if you broke even every month for a while, to me, that's still such a win because you can play the long game. I think people like, yeah. So what you just said was like music to my ears. My brain was like, "Whoa!" That's what. Yeah,
man. Like, there's a lot of loan officers out there that are super transactional, you know, and like, because it is a transaction, right? It's a big transaction. A lot of times, it's the biggest transaction that anybody will ever do. And like, I'm like, look, you know, my goal is not to close the loan. My goal is to go a step further than that. 7 months after we close the loan, when Drew gives you a call and says like, hey, how's the pro forma working out? That's what makes me worried that like it's not cash flowing. But if we do everything up front, like, of course we're going to close the loan. I'm not worried about that. I trust my team. But like, my goal is not, it's not even the 7 months after closing. It's like, John, I think you know this, man, like, work can become optional to some people if they have 7 properties that are cash flowing a good amount, or it can retire somebody in the household, you know, a mother, a spouse, whatever, a father. And so it makes, you know, that's the get rich quick stuff, is like looking at 3, 4, 5 years down the road that like you can, you know, you can retire one of your parents or something. That's what real richness is, in my opinion.
I can't agree more. I mean, I have this one property, nothing big, 3 bedrooms in Scottsdale, 2 bath. It's just basic house. I bought it like 4 years ago now. And in the first 2 years, I was like, oh, this is easy. Yeah. Like, I was printing money, like literally printing money. I was like, I kept raising my rates, kept making, it was booked solid, right? I think I was one of like 10 in the neighborhood, maybe even less. But what people don't ever think about, like, and I thought about the months that were like, okay, what if something happens? What if I don't make any money? And then obviously we went through that period. The market has slowed down big time. I'm not even close to making the money I was on that property. And it's still good money. Like, it's still great money. It's still a good investment. But I think a lot of people would assume like, oh, this is a bad investment now, I want to get rid of it, because they weren't used to that gold rush money, which is hopefully it will happen one day again soon. That'd be amazing. But you know,
likes digging up like, gold, that's for sure.
Man, I'm always trying to find some gold nuggets. You bring up so many good points, man, and like you probably work with a lot of first time buyers and experience. You probably have a good combination of both. So you probably see a lot of different scenarios, I would assume.
Yeah, man. Yeah? It's just my fault is I care too much, you know. And like for the first time buyers or buyers, so if somebody's buying for themselves, like there's so much mortgage jargon we could go over, but at the end of the day, like the brass tacks is like, what's my monthly nut on this thing, and how much dough do I got to bring to the table out of pocket the day I close? Like that's like the main stuff. And it's just like explaining that to them on a first grade level. And like what I do, it's called like the clear mortgage plan, man. I love it. It's just like literally, it's like imagine 3 swim lanes right next to each other. At the top of those swim lanes, it's three different rates: 7, 6, 8. And I'm like, lower payment option is lower rate option. That's more cash to the table at closing. Higher payment option is less cash to the table at closing. And so then it's like nobody chooses the rate for you for the most part. You get an option here. And so Drew is just here to educate you. And I don't want to feel like I'm selling anything. I'm just selling free education. Now, of course, we get compensated once the transaction closes. But in that way, people don't ever feel like, there's a lot of bad. I mean, even Disney World gets bad and 1-star reviews, but there's a lot of those. There's a lot of those for mortgage lenders too, and so I just try to make it as educational as we can.
Yeah, and easy, and you bring up a good point. You brought it up earlier too. Like, this has got to be one of the most stressful. What happens when you're going through that process, getting the loan, and it's not going to close on time, and then maybe it's the person's like probably starts to go into full panic mode at that point.
Yeah,
I can imagine your job getting almost a counselor at that point, therapist.
I mean, it's just over communicating. It's almost being like the crazy ex-boyfriend, crazy ex-girlfriend. So it's like, if you're the buyer, John, it's telling you, hey, look, so we do have to get an appraisal, and then educating you on that process. If the appraisal comes back less and the sellers don't lower the purchase price, you're going to have to bring $5,000 extra to the table. And it's just like, hey man, I know you got a brand new job. We need a pay stub, or we need a signed offer letter or verification of employment before we can close the loan. And then we don't get that. So it's just like those little things, but none of that should really happen on the day of closing. Like, there could be some hiccups that delays closing. These kind of hiccups will happen. It's commonplace. It'll happen with other lending institutions where that's not communicated.
You brought up some points about that. Like, how do you prep your clients ahead of time, right? Do you get them to start getting their finances together, get some letters of recommendation together? Is there like a couple of tips you're like, hey, we need to do this ahead of time so we have a solid, like, slam dunk?
Please get pre-approved. That is the main. I can't tell you how many times we just get a contract. I'm like, wait, who is this person? I'm like, all right, bro. All right, let's walk this back. You're at halftime and we haven't even kicked off yet. So
maybe explain in simple terms what pre-approval is and what that process is. I'm just curious.
A lot of times people don't really enjoy the loan process. They just know they have to go through it. They enjoy getting the keys to the house, right? And so I think that's a good analogy. So whenever you go to the doctor's office, you don't go right to the back and they give you your prescription or prognosis. A lot of times you got to sit at the front desk and fill out and click boxes and do all that and grab your ID and grab your charts from the last doctor, right? A lot of times you got to do that. That's not the fun part, but that is going to help those missed closings not happen. And nobody's perfect, but if we try to do that in we got a perfect system, but there's always outliers, and so, like, John, for instance, like, I can make a perfect example for you. It would be like, you're self-employed, and let's say you haven't done 2023 returns yet, and you're planning to do that. And depending on how you do that, you may be eligible for a 3% down home loan, or you may not be. And so we're like, John, we're going to pre-approve you, but you can't close on a loan until your returns are filed. They're prepped from your CPA, and we review them and said, yes, you're going to have $1 million in usable income. Make sure they're filed that way. Don't change the prepped returns we just looked at. Little things like that happen, man, where they go back to their CPA and then it's not the same returns that we pre-underwrote or pre-approved. So there's little things like that, but for the most part, I mean, just fill out the paperwork in the lobby of the doctor's office or get pre-approved. That's what it is. Follow
the steps. Yeah, like you said, don't go get a couple of halftime touchdowns before the ball's even kicked off. Yeah, that was good. Yeah, the pre-approve is key, man. It just helps not waste everyone's time, basically.
I'm under contract in your neck of the woods, a little farther north.
Yeah.
I'm going through something new right now, which is, it's kind of new. I'm always the one getting the funds for people to close deals, but now I need funds, right? I found a deal and I'm trying to joint venture with somebody or just partner. I'm just trying to figure out a way to raise the capital to get this bad boy closed. and I got some calls that I got to make. I got some verbal confirmation, but I need, in theory, I need probably about $320,000 on a purchase price of about $940,000. And some of that's down payment, some of that's closing costs, some of that's rehab. And, some of that I could raise, some of that I could put on 0% interest rate credit cards like yourself. But depends on what we do. I'm anywhere from, if we can put 10% down versus 20, we're anywhere from like a 20% cash on cash to a 30% cash on cash return. And I just think this property is it's a slam dunk. And so what I've done is I just try to talk about it, and I'm willing to partner with anybody that would make the deal comfortable for them. My objective is kind of like the loan thing, man. It's like, I'm not looking to get rich on one deal. If that's what you're looking to do, real estate's not going to be a good fit for anybody. I'm looking to find like-minded people that I can work with, that I can maybe teach, or they can take some of the responsibilities, what have you. But all I know is we need to raise some money, and I'm willing to give away equity, cash flow, responsibility, whatever that is, to try to make this deal come together. And man, you got any tips?
I saw a preview of the property. It's insane. I was like instantly jealous. I was like, oh my God, this place is so sick.
You can be part of it, bro.
It was like, I was like looking at it for a while. I guess so. I didn't realize that part. Yeah. Sweet. Let's go.
I'll tell you
and partnerships are interesting, man. It could be like a million different ways you do it. Like you said, it could be cash, or it could be somebody put in some cash and some sweat equity. It's
so
cool.
I'll tell you what
it's a good property.
I got $150,000 verbally committed right now, and like passive capital commitment. That money is not in escrow, so I don't consider it done until that is the case. But yeah, man, what a perfect time. You know anybody that'd be interested in double-digit returns in real estate?
I feel like people are always asking me that, and they might not be able to do it on their own, or they're too nervous to do it on their own, or something like that. I know selfishly, you and I always promote the Raw Built channel coaching, because we have a bunch of great students that we coach in there. So selfishly, I would say we'll reach out to a few students that are dying to get into the game. I think it's a cool property, and I have like a million questions about that, but I know we'll do a part 2 about how you maybe found that place, how you ended up raising the money and closing, and then what you plan on doing. I think that would be really cool, because you and I were texting earlier, and I was starting to ask a bunch of questions. I was like, oh, why don't we just start recording this actually? So we have to do a part 2, and we'll actually be able to show the property when you fully close and start modeling. I would like a personal tour too, for sure, because that place looks sick.
Yeah, man, I'll tell you what, I can do you one better. You don't have to do this, but I know there's going to be an inspector there tomorrow. If you'd like to go check it out.
Oh,
because
I probably will.
This is what I would say, John. Like, I just want to, I want to create a community of people that want to invest in real estate. And so, like, if maybe it's not you that we raise capital from, but maybe you can help us raise the capital, then I think there's a percentage of equity that you could negotiate out of you handling it. Like, well, Drew, I'm only going to do that if I can property management, or Drew, I'm only going to do that and like, that's what's great about partnering on real estate, is because we just got to have that conversation. If it's me or you, or me and Irvin, which is where I have some commitment now, it's like, look, man, I don't need to be the richest man in Babylon. I just want to be somebody that can bring other people together. It's kind of like the plumber. How do we put all the pipes together? And just sorry for another crappy analogy, but
yeah. Literally crappy.
Yeah, exactly. No pun, but
yeah, now you got my wheels turning. So I was just talking with some people the other day, and some people have some cash, and they're like, I don't really want to sit on this cash. Yeah, and some people are just nervous about real estate, and if they partner with somebody that has a good experience, good track record like you, it makes it a lot more calm.
Can I sell you on the deal?
Sell me on the deal. Let's hear it.
So,
pitch away.
The reason I'm excited about it is, in no specific order, but 10 acres.
Yep.
Pruned landscaping, pruned Jupiters. It's on a mountain with mountain views. And the property could easily have a wedding, and it has room to grow with ADUs. And if anybody's familiar with Kai Andrew, it's kind of like a perfect land hack type of property. Also, the main home has a layout that where you can easily make it from a 3-bedroom into a 7 in that market, in that specific market. And if you were able to sleep with the ADU, with the 7-bed, this property would sleep 20 plus. That puts you in super property range. I have actuals from friends in that area right now. Like this is what, the end of March. I have March, February, like going back 6 months. I have actual Airbnb data of properties similar but smaller doing $18,000 a month, John. And AirDNA will say upwards of $200,000 that'll sleep that type of guest house. And then now it's a multi-function property, corporate events, weddings, retreats, and then you have the little glamper area for stargazing and Grand Canyon trips as well too. And you want to do a Mr. Abasolo of Raw Built style and put in a pickleball court, there's room for that. And so that's like the exciting, that's like the email marketing part of that property. Now the ugly part is I got to do the hard work and raise the money. But I have some super properties like this that I own fully myself that I would be more than happy to show how it's worked. And like Disney, I just had my best month ever, and I've owned this home for 22 months or 24 months. I've owned the home.
And you just had your best month ever?
Man, in March.
Wow.
Yep. And that's
Sweet,
a brand new listing with promo pricing. But it just shows you what theming
can do.
Still
doing that. Yeah.
And to bring up Bianchi is, I think that's how you pronounce it, is he always calls it for the 20% rule. So he thinks everything is a win as long as you can hit the 20% rule. And that's basically 10% of the purchase price is what, $94,000, and just double that, 180,000. That's right where our pro forma is right in that range. But if we take the most aggressive approach, you could easily surpass the $200,000 annual revenue numbers.
Ooh. Wow. Yeah, that's insane. I've been working really close and with a bunch of different property managers lately, and it seems like a lot of bookings are up strong. But your 10-acre property, do you know if you're able to do like an Airstream or another little small cabin on there or anything like that too, since you have so much land? Or you probably don't even need to because the place is massive.
Yeah, so
you could.
Yeah.
Oh,
That's cool. Yeah, Williams area hates the soft-sided structures. So if we put up a tent or a yurt, they're gonna hate that.
Yeah.
But if we do an A-frame, it's $40,000. I got the guys up there that'll do it, and that's low side 30, high side 40,000 in gross revenue. That's just wow. Where it would be, and you'd be about 140 to 150 high side for just the main property alone. And then if you had one wedding there, there's a $5,000, $10,000 wedding fee as well too.
Very interesting. Somebody who's listening to this might swoop in my deal, but you and I are gonna have to chat more offline here about this.
Yeah, man. I got a good loom and all that.
They're
stuff.
Gonna be hitting you
up.
up.
A good loom and all that stuff put together, but the nuts and bolts of it, and I'm just hoping.
Yeah.
I'm hoping there's a way to take it down at 10% too instead of 20%. So that's
10% would be insane.
Yeah, so that would, basically you need like $320. That's like $120,000 in rehab and furnishing. So that can probably be taken care of with just credit cards. But then if you got 10% down, you only need like 180. So
yeah, that'd be insane. 10% down would be so amazing for you. Holy crap. Or for everybody involved, really. Yeah, I need to find a 10% down deal. Or I found one right in front of me and just got to partner up with you.
Yeah, man. Well, the thing is nothing's, what I would tell anybody is nothing's out of bounds. I would just hate to see this deal not go to somebody that's as passionate about it as me and you. And
totally.
If it goes to the right person, then I'm happy. But I just think I've only done one other partnership like this before. And it's probably my favorite Airbnb. It's the only one that I haven't sold. It's the only one that hasn't had flood damage. It's the only one that hasn't been on the news channel. It's literally the best property. It's literally the best property I have. And so I'm always like, Taylor, I need you for a good testimony, bro.
Yeah. You're like, come on, we need to do more of those.
Yeah.
Easily. Yeah. Plus it's a good testimonial too.
Yeah.
Damn, dude, this was fun. We should do like a little series and like maybe chat more often and just, because like I said, we didn't really have anything on the books. We were just like, oh, let's chat. You know, I wanted to learn more about your deal, learn more about what you got going on, but where can a lot of people find you?
Yeah. So social media is probably the easiest way to get me directly. Drew or at Drew Do Loans, and that's on all your major handles. So X, YouTube, Instagram, and I'm still on TikTok. I think that's still not banned, so I'm still there too.
I wouldn't mind if it bans because I have no idea how to figure it out. It's so complicated to me. That's cool. And then if somebody wants to reach out to you for a loan or possibly talk to you about that, same thing, hit you up on social?
That's probably the easiest way. We got a website, hostloan.co, and there's always a quick apply button right on the homepage when you sign in there, and you get to see our awesome team. Anita, Ben, Jess, Wendy's our newest employee. There's a handful of us that work together to all make this possible for everybody that wants to take down an Airbnb.
Let's do it. I'm going to have to hit you up. I'm going to hit stop recording so we can talk offline about the deal.
Absolutely.